Good morning, everyone. This is Marshall Giller bringing you the morning comment for October 8th. The dollar continued to decline yesterday. It looks like perhaps the U.S. currency's unprecedented run of uninterrupted gains may be interrupted, at least this week. Even after German industrial production fell the most in over 5 years, Eurodollar still managed to climb, at least a bit, and most other G10 currencies also gained. The dollar was stronger against some emerging market currencies, however. One notable point in yesterday's action is that oil prices fell even while the dollar fell. One of the explanations for why commodity prices have been hit so hard recently is because of the stronger dollar. But WTI and Brent were down sharply, not to mention copper too, although I just did mention copper, on a day when the dollar was generally weaker. What this suggests is concern about slower global growth is hitting both the dollar and commodities. Fitting in with that idea, bond yields fell yesterday and the implied interest rate on Fed funds futures collapsed. Stocks were down sharply too. Now, I wouldn't expect fears of weaker global growth to be that much of a hurdle for the dollar. On the contrary, it'll only make the domestic demand-led U.S. recovery seem that much more robust compared with the other economies. The currencies that are most likely to suffer would be the commodity currencies, the Australian dollar, the New Zealand dollar, and the Canadian dollar, plus the Swedish krona, which is highly leveraged to trade. In fact, the Canadian dollar was pretty much of an outlier yesterday. Canadian building permits plunged, and as a result, dollar-CAD jumped. Today we get Canadian housing starts for September, which the market forecasts will increase. It remains to be seen, however, whether the huge drop in building permits in August marks the beginning of a softening in construction activity. It's possible that the figure may miss expectations, which could weigh on the Canadian dollar further. Otherwise, we have no major events or indicators coming out from Europe and the UK. In the US, the spotlight will be on the minutes from the FOMC's September 6th and 16th and 17th meeting. At that meeting, the FOMC kept its considerable time statement. The key point was the rise in the Fed funds forecast. The minutes may reveal whether they kept intact the statement because of concerns about not sending too hawkish a signal to the markets, given the upward revision to the rate forecast. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.